Well, Prime Minister Carney promises that Canadian oil will remain competitive even as oil prices continue to slip following Venezuela's recent exchange of power. For more on how this is impacting broader markets, we're joined by Steve Rowles, Senior Portfolio Manager at TriVest Wealth Counsel with Wellington-Altus Private Counsel. Steve, thanks very much for joining us.
Hey, Roger. Great to be here.
It looks like the markets kind of had their reaction. Things seem to be calming down as everybody's trying to sort out what's unfolding.
Yeah, it does indeed. I think Trump's comments today about, what was it, up to 50 million barrels coming online. Well, that's going to put more supply in the market, and that's put pressure on the price of oil. So that's why we're seeing the markets react the way that they are. But it's a very interesting time indeed, looking at the oil markets overall.
And have we seen any details on when that's coming on? Because they're already running at about a million a day overproduction.
Yeah, right now they're about 800,000, which is equivalent to the production of Suncor. So it's really, it's so early to tell what's happening right now. There are more questions than answers right now. And when you have this type of environment, it's more of a speculative type of market than an investment type of market. So it's very difficult to know exactly what's going to happen. There's so many questions about the government's coming in place, the property rights, constitutional rights, and how long this is going to take and what the overall plan is. A lot of rhetoric, but we need to know more about what's actually going to happen with the governance. So right now it's more of a speculative market.
And what are you doing with all that? Are you just kind of sitting on the sideline going, let's just sit here for a second?
Yeah, I think it's best. I think on the Canadian side, I'm holding on to all my positions, primarily Suncor and CNQ. But on the U.S. side, there is some optimism, and specifically with Chevron, which is an existing holding of mine. So that's, I think, the most attractive play. So the winners are really the U.S. Oil producers long term, should benefit from this, obviously. But the number one winner is actually the country of Guyana, right next door to Venezuela. And they've been under some pressure over the past couple months and years with territorial claims by Venezuela as recently as March, claiming over 2/3 of the region of their entire country. Now, more specifically, there's been some great offshore developments on the oil markets in Guyana, and specifically with a consortium of Exxon holds 45% and of a consortium, including Chevron with 30%, which they acquired from Hess last year, which was approved in July this year. And then the third member of that consortium is CNOOC from China. So with having the territorial claims put to the sidelines now, that opens up that 11 billion barrels of reserves that are offshore. So that really opens up a great market for Chevron, Exxon, and China as well.
Yeah, Guyana's kind of the quiet little sibling sitting over there. It's going to sound funny, but I was playing one of those geography games, and Guyana was one of the things on it. Their GDP is, I think, 40,000 per person, I think, per capita. It's a little quiet powerhouse down there, isn't it?
It's a powerhouse indeed, and they need the infrastructure, and it's coming in waves, and they have the biggest market there. So I think that this is a story that's not really being talked about. But having that territorial claim now gone, it's a free market there. So they're producing about 1 million barrels a day, and that is expected to increase substantially till 2030, up to 2 million by then. So more supply, more money for those three companies.
And any other opportunities do you see for Guyana or in that area? You've got Suriname there. Are they similar situations, or is it more just Guyana with the oil?
Right now it's Guyana, and right now I think it's best to focus on the short term till we know what the long-term plans are. But the entire region, Trinidad and Tobago, there's some opportunities there for more offshore discoveries. So it's the entire region is quite buzzing right now.
And then moving back up to Canada, you mentioned some of the companies. But for now, it looks like Canada's fine, but we really do need to get our ducks in a row, though, don't we?
Yes, indeed. It's a question of, okay, we need a pipeline. We all know that. We had an MOU announced on November 27th, standing ovation, elbows up, let's go. But the question remains is who's going to pay for the pipeline? If there's other areas of the world which have are open for the oil markets, who's going to be funding that $40 billion pipeline to be built? It's a question that remains. Premier Eby in BC is talking about refineries. Well, who's going to build the refineries? Where's that investment going to come from? And more importantly, if you build a refinery, well, those require more pipelines. So I don't quite understand what the philosophy is there, that there's an immediate need for a pipeline. Hopefully it hasn't passed yet, but we need to know where that money is going to come from. We need to be an investable country again. So it's deregulation is key right now.
Okay, we're going to have to leave it there, but Steve, thanks as always for joining us.
Great. Thank you, Roger. Take care.
Cheers. You too. Steve Rowles, Senior Portfolio Manager at TriVest Wealth Counsel with Wellington-Altus Private Counsel.